Hello, welcome to the market weekend review. It is Saturday, March 9th, 2024. All right, let me jump into YouTube to make sure everything runs properly. I don't expect anyone to show up in the chat room. Usually there isn't anyone there, but at least I have that open just in case there is somebody there with a question. All right, I'm gonna skip talking about crypto today, all right? Since I talked plenty about crypto and ETH, Ethereum during the week. Nothing changed there. First up, TLT. Looking good. I saw a bunch of cover calls, 97 to 98 during for last week that expired Wednesday and Friday. And I saw a few already for this coming week at 98, but I will look to add to it depending on what TLT is doing. No doubt I will keep selling 97 upward. Otherwise, I think nothing new here. It's nice to see the zone held, right? If you follow me long enough, if you want to buy in the zone down here. Sure, can I get down here? Um, Unless inflation's raging again, can you imagine why it would be down here again? But for now, if you look to add, that's a place to add in the zone. The place to trim in the zone. All right, let's take a look at all the major indices. Still pushing against the upper range of any kind of trend line, right? Yeah, I'm not shorting the right now, but if there's one to short, that could be one. Same thing with SPY. I am short SPY, but that bear put spread is losing money. But I do have until the end of the month, March 28th, so I got 3 more weeks to for this to play out, right? So yeah, it's pushing. QQQ until it break the 20, and until then, it is what it is, right? It is, yeah, and it's getting more narrow. If you can exclude out at least three of the Max 7. So let's talk about the Max 7. Which three are we talking about? First up, Tesla. Ugly, right? Ugly. I have not been bullish on Tesla since up here. Okay, the last time I was not even up here. Up here was when I was talking about selling, trimming, pushing against resistance. I was selling put spread below to collect premiums, but as far as bullish now, Tesla, not good, right? It's right now. Every time it break below the support of 181, 182, you see the bulls try so hard, okay, so hard to prop it up because they know if they don't, if they can't, we can see 160 and beyond. I did sell a put spread 165, 160 that expired worthless yesterday. No complaint there. So on further weakness, I will look to sell even 160, 155. It's crazy, but yeah, there's nothing bullish here about Tesla. Even when it break the 20, I was not bearish here, but at the same time, I was not buying into it. I didn't buy. Technically, breaking the 20 looked decent, but fundamentally, what is good about Tesla as far as the fundamental? Are they blowing out more cars? Are they increasing production? Are they increasing prices? Is demand increasing? The answer is no to all of that. Okay, so fundamentally bad. Apple came down to the zone. Okay, if you want to, you can draw in a zone. Now let's do that. Let's draw in the zone, the support zone, another zone. It was ugly. It was a losing trade to buy Apple when it broke down. Okay, here I was buying Apple here, and then of course it gapped below my stop twice. Twice it gapped below my stop. Nothing I can do about that. Now it's in another zone of support, so better hold. It's ugly. This is, yeah. I mean, luckily the position is not huge. Okay, 60 shares. That's not huge. It's big enough to feel the pain, but it's not huge. Um, it's more Apple than I have owned in a long time, and luckily I sold some put spread. So for now, I will keep selling put spread, but I'm selling way below. Okay, way below. But the money did rotate in on Friday, but it's still pretty weak. You know, it's nothing to be happy about Apple, right? So to me, um, if Apple get back, it filled the gap. It did. See, look, it filled the, well, yeah, it barely filled the gap. If that, let's see, the gap was 173.79. It peaked at 170. Oh, see, it was 9 cents away, and seller come in. uh, the seller that got gapped down like I did not. Okay, I did not. I was watching for that gap fill. I had a trim. I have a sell order in at 175 to take a loss, and of course, my gap was here, right? That failed, and when this gap happened, of course, that order didn't trigger. Well, it went live and then it expired. My bad on not set. But even if I set it up, I would have set it up 9 cents above what happened yesterday, and it went not. But I want to remind myself to put in a sell order right there and take the loss on the gap fill, because I have a feeling. I just have that feeling that there is a lot of people that bought Apple a lot higher than 170 that will say, I will take the pain. If I'm wrong, I'm wrong. But for me, I think this 175 range is going to be a lot of seller coming in to exit. Once again, what is fundamentally bullish for Apple? Last, I know iPhone sales stink in China. That virtual goggle that they want to charge 3,600 or whatever it is that they're charging had not so wonderful review. It's nothing exciting there for Apple. So all right, so that's two. Number three, Google struggle. Not as bad as Apple because fundamentally it is good. It came down to support the 200 MA. I sold a bunch of put spread for, and they did okay. The highest one I had was 131, 128, and then I sold 129, 128. Yeah. So I did not add any share. Um, I have a bigger position in Google compared to Apple. But definitely not Max 7. Okay, not Max 7. Would I add to Google? Maybe, but for now, I'm content in selling 129 spread and below, right? And even that is slightly risky. If you want to be even ultra safer, I would say sell. Not that there's any juice in there right now, okay? So I'm very mindful that I might have to get stopped out at 129. If this, yeah, I'm watching it. Okay, I'm debating on where to put my stop, whether to put the stop at 129 or because do I want But here's the thing. Do I want to get stopped out at 129 and then buy back at 120? That might be the thing to do, right? Because there is that ref low going back to October. The October low of last year was 120-ish. So if, here's the thing, if the NASDAQ roll over and decided to do a 3 to 5% correction, it is very likely that Google will retest last October low. Very likely, okay? I won't say certainty, but very likely. So that's why I am thinking about, as painful as it is, to put a stop on at least half my position. I do like Google long term, but it would be silly to not get stopped out at 129 and buy back $9 lower. $9 is a lot, okay? A lot. So that's 3 gone as far as Max 7. Nvidia, I do not need to talk about Nvidia. We know Nvidia is good. Meta is good. And Netflix is good, right? So that's top 3 right there, right? So Netflix, strong. I'm not touching it. No. But it's, the chart looks very much like, and of course the last one is Amazon. Same thing. There's your Fantastic Four, okay? You got Amazon, Netflix, Nvidia, and Meta, the Fantastic Four. And all 4 charts are very strong. I'm not chasing them, but at the same time, I'm not doing any kind of bear spread on them because it's too crazy. Avoid. It's better to just stay out for me. All right, let's move on to, real quick before I forget, the goal, okay? GLD. I did trim on this. I cleaned up the chart. The chart was so messy. During the week, it was so messy. I got tired of looking at a zillion line because I trade gold for a long time. So the longer I trade something, the more line there is. But I got rid of it. But there is a trend line that I deleted. I'm too lazy to draw it back in. Between 205 and 206. So that's the next trim order for me is 205.5. Okay, but let me tell you where I think the next spot to trim is, and if you can't see it, let I draw it in for you. Okay, and this is, that's why I think, okay, I'm using, you have higher low, higher high. Okay, so if this trend, I'm gonna keep this line there. That's why I say 209, 210 is the potential target for this run, right? Can it go higher eventually? Maybe, but I will tell you for sure, I'm trimming small here. I'm trimming small here at 205. I'm gonna trim big at 210, okay? Because I think that's asking a lot. Now, if you pan back 3 years, guess what? 217.5. Can go to like 217 to 220 3 months from now? That's possible, right? That's possible. And if that's possible, then GDX is possible. I got a couple hundred share assigned at 29.5, which I'm fine with. With the premium that I got, I actually did better than 29.64 because, of course, the premium from the cover call is more than 14 cents. So it's a good thing. I did flip around and saw a couple of naked 28.5 puts for this coming week. I got 12 cents for it. Not huge, but should uh, GDX retreat back, yeah, I don't mind buying back those 400 shares $1 lower. $1 is a lot on this. Okay, it's 3% plus on this move, right? So anytime when you can reacquire something 3 to 4% below or better, yeah, I like my risk reward here. And if it doesn't, that's fine. If it doesn't come back into the portfolio, I will keep selling put spread on the way up. I got it. So that's my GDX play, right? So let's move on to pharma real quick. FV staying strong, right? Um, I was on record for the past month. Once it passed, break this resistance, it's giddy up, and I did not trim anything. Doesn't matter about this thing. To me, the the potential target is up there. Okay, it's gonna get close to 200. Let it run. Let it keep running. There is That's one of the hardest thing for traders is knowing when to trim. Let your winners run, right? And this is one of the occasions that I'm on record to say let it run. So that's FV. Same with JSK. Yes, I did not trim on this crazy pop up there, but that's okay. Will I buy? Yes. I'm selling naked puts on JSK at 41. Okay, because if it get down to 41 on a correction, I'm fine with adding 100 share here. I have less than 100, but same thing here. Very similar story to FV. Okay, it break. Now, can it get to the 47 area? Yeah. If we get there, then I will consider trimming. Okay, because that's the all-time high going back multi-years. So yeah, that would be serious, right? But for JSK, same thing. Let the winners run. Uh, XBI is hanging around the you know it's basing, right? And no, I'm did not regret closing out the two bear spread I had because they were 93, 86, 92, 85. They were way below. There is no chance of them making money. So I'm glad I closed them out early when I was still able to make a little money, $10. Enough for a meal for one at McDonald's these days. But no, it's can it break down? We'll see. On the breakdown, if there is one and it fill the gap at the same time touching the 20 MA, then that's a consideration to either reshort if the 20 fail to hold, do something like a tight bear spread like a 96, 91, 96, 92, like a tight spread like that. So that's possible if it come back into the zone and fail to hold the 20, right? But until then, I'm neutral on XBI. I'm neutral on a lot of small biotech play from like Alnylam. I did not add any. I did add some at 146 when it went down, I think. No, it was 148. It was 148 that I bought. I have ordered at 146 that I don't believe trigger. Okay, I do. I have ordered at one. The last time I bought at 146 was here. But as for this week, no. I have ordered at 146 that did not trigger. I did have ordered at 148 that did trigger. So I'm building up my position in Alnylam. ARGX, oops. I did sell when it popped over 400, and I did add back early during the week when it was 370 something. I bought a couple share again. I went off. I got out. I trimmed completely out up here in the 408 or 405 range. Yeah, and then I bought back when it was 23 or $25 lower. So yeah, for now it's okay. The one that I had the most exposure to is, of course, CYTK. It broke support, the gap high. I'm patient. I will wait for the 100 MA. Okay, so over the next 2 weeks into the end of March, you can see it would not shock me to see CYTK end up somewhere between here and wherever the 100 MA is, and at that point I will add more to it. Okay, it's a risky play, but I'm willing to put money there because there is a potential of 50% return. I take buying something cost in the low 70s and perhaps selling in the triple digit area. That's the risk I'm willing to take. RCKT, Rocket Pharma. I have share. Would I trim 29? Yes. And above? Absolutely. Would I buy 27 and below? Yes. Would I buy a whole lot at 25 at the 100 MA? Yes. See, if you're looking to buy, I have an order for a big lot down here at 25.5. Okay, I'm gonna move it up along the way. It was 25.5 during the week, but I'm gonna move it up to 25.6, wherever, just below the 100 MA. Okay, because I think it lined up nicely with the ref low. So yeah, 25.6. Yeah, there's a big order there to grab some rocket should it dive down there. Okay. All right. Is there anything else to talk about? Oh, of course. Let's finish this sector with Amgen. I had been staying out of the put spread game, right? Where would I buy? 264, the 200-day MA. Okay. Sometime this coming week is going to line up perfectly with this channel low or this downtrend. So yeah, until the sentiment change, this is the example of good fundamental, bad sentiment, and bad sentiment is controlling the chart. Okay, when it comes down to TA will show you where sentiment is more than where fundamental is. Okay, so regardless of the fundamental engine, the TA, the sentiment is so negative since the channel high, right? So it is what it is. Let's talk about banks. Morgan Stanley, I like, me recommend, me sell puts, naked put spread, doing good. Would I add more share? Yes, I have ordered in to add share below 86 all the way down to 84. I'm selling put 83, 80, 82, 79. Okay, I'm liking Morgan Stanley here. Would I? Well, if it get back to the 90, mid 90, yeah, I'd be out, right? Goldman Sachs, I turned bullish on Goldman Sachs, right? I talked about the Koi Spring. I added share yesterday. Yes, I did. Where? 387-ish. Okay, and I'm not. Did I sell put spread? I may have, but my put spread is way below, right? But for now, I like what's going on here with Goldman Sachs. Fundamentally, is it improving? Perhaps merging acquisition and IPO is slowly coming back. Perhaps, certainly trading wise, along with Morgan Stanley, I'm sure their trade desks are making a lot of money so far in the past few months with the market up so much. But yeah, this is a very bullish pattern here as far as Goldman Sachs. Okay, Bank of America. I talk about how I like Bank of America. Yeah, it run. Not it's not a surprise. Okay, if you look at from J.P. Morgan to Goldman Sachs to Bank of America, yeah, it's not a surprise. Even KRE, I talk about time to buy KRE back down here, right? So yeah, for me right now, I don't have any exposure to KRE. I like to focus my energy on Morgan Stanley and the Bank of America. I do have two bear spread on JP Morgan that likely will be a loser next week, but nothing I can do there. Okay, I do have a bear spread on AXP as well, but that will be also another loser. Nothing I can do there, right? Uh, on any bad day, I will see if I can close it out for a smaller loss, but yeah, it's too strong, too strong. Okay, let's move on to energy, USO. Uh, yeah, you know, I was looking to do a bear spread on USO in the 74 uh, range for a while. That when it was down here, when it was floating in the mid 70s, 374, and then I decided last week to say, forget it. I don't like this coil spring build up. I rather not take my chances. And is it the right move? I don't know. I just know that I don't like the action in oil. I don't think it's good for the economy. I don't think it's good for anything. Um, no, I'm staying out of it as far as the oil, the USO. I'm not long. I'm not short. I think the path of least resistance might be up here. Now, would I go short in the 80? Yeah. 78? Yes. Okay. Would I do a bear spread at 78? Yes. But for now, the 74 bear spread is not in play for me. I did trim more Exxon. Okay. I trimmed a few times when it was banging against 200. And then, of course, I trim up here in high 107. I didn't I didn't get the 108. That was before. Now, if you have it, keep trimming. Can it get to 110? Don't ask me why. Compared to Chevron, which is very, very much different. Yeah, Chevron struggle. I trim on record to say that I trim. I trim. Okay, I trim. Well, I didn't trim down here. I start trimming here. Okay, for those of you pay attention, I did. I talk about I trim here. 152 above 152, I have ordered in to trim, especially at the gap fill, right? Yeah, 153 and above, yeah, it's a no-brainer. Okay, so trim. Would I go long again? Maybe, maybe. Put spread at 145 and below, maybe, but no. Now, I did say that I like LNG because of the channel low. I did sell put spread and made money. Expired yesterday. Okay, so yeah, it's on a downdraft. I will buy. Okay, I will buy share at the 150 range. Okay, on LNG. I'm not. Uh, it's bearish on liquefied natural gas. It's been ugly, but at this level, here is where I'm looking at the TA chart more than the fundamental. Okay, I have no idea what the demand's gonna be. Winter is over. Is summer's gonna be so hot that people use more energy to run the AC? I have no idea. But that's the play on energy. Okay. Uh, something I have not talked about in a long time. Oxy, yeah, it's similar to Exxon, more than Chevron. Oxy, Warren Buffett is still big in there. He's making money. Last year, all of last year, every time it was 58 and around 58, he bought, right? For those that pay attention, he bought. And yeah, I wouldn't touch it. It's just one of those things where I'm just like, he bought, right? For the past 2 years in the 58. I think his cost basis is probably around 58-ish. No, I just don't see a reason to be excited, okay? Don't see a reason to be excited on Oxy. If you have it, trim. 62, trim, okay? Absolutely trim. It's trim here. At least have your stop, okay, somewhere, but it can run. But can it get to 65? That gap fill, if it does get there, please, please, please trim. Okay, that's all I got to say. Med Device, Abbott. Once again, here's another one that coincide with my AbbVie and Glaxo, Goldman Sachs, all those. When you break a long-term resistance, it can run, right? It's there. One more, okay? This is a long trend line here. It was nice to clear this area, but if it cleared this, okay, if it cleared this right here, I think you can see 130. Okay, is it impossible to see 140? No, but I am buy the dip here. Okay, I am a fan of buying the dip. If anything, I don't mind selling put spread 115 and below, 115, 110. Okay, doing put spread up there, collect premium. I have exposure to Medtronic. Not as pretty of a chart, but if this thing run, if it can get back and break this resistance, okay, let me change this color here, so make it more stand out. Okay, that white line, okay, that white line, it has a hard time holding. Okay, every time it break over it, check back, fail, 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 fail. Okay, so you know what I said, the more it tests something, the more chances it will likely break sooner or later, right? Because guess what? You get a lot of remorse holder getting out. Okay, this is a perfect example of, it just need to absorb the sellers. See, going back 5 years, look at that, COVID low. But since then, yeah, big support. This big chunk of Medtronic, big chunk, if you don't know, Medtronic was big in making the ventilators, right? So yeah, that's gone. That business is gone. Okay, so it need to absorb all of these painful back holders, right? But once it's absorbed, then back to the growth that we expect before the pandemic. So yeah, I'm bullish on Medtronic long term. The only hiccup is a recession. EW, yeah, it's I have more Medtronic. Next up on my portfolio as far as this sector is, of course, EW. I did trim on this pop. Be crazy not to, but yeah, it's looking good. Okay, it's looking good. Okay, it's for sure. I have an order to trim at 95. I trimmed yesterday on this big pop. Well, yesterday or Thursday, I had an order to trim at 91, right, at the gap fill, and it filled the gap. more than fill the gap. It opened above the gap and run. So that's very bullish. That's like a what they call a professional gap. Okay, when you gap above a gap, right? Impressive. Yeah, I think it's a foregone conclusion that it will break the 52-week high. I have a small trim order at 95, and then of course up there at 97.6. Okay, let it run. This is one of those examples where, yeah, let the winners run. It was painful. Okay, if anything, that should have been add. Note to self: don't be so afraid. Buy. Um, and that's about cover everything. Just randomly throw in some other stuff like DraftKings. I'm buying the dip here. Okay, this is one of those long-term resistant breakout, check back. I'm adding slowly, small, still a small position because I do think this thing can run. Okay, I do think this thing can run. Okay, it's a long time. Okay, it's been a long time down here, so it's absorbing. But once it absorb everything, it can run. Okay, let's end on TKO. Okay, I like TKO. Um, I'm adding. I've been adding. I keep adding. Okay. Um, I like to build. I got more order down here in the 78 range. Would I add a whole lot at 75, 76? Yes, but I don't mind adding. I like TKO. Um, but that's it for this week. Thank you for watching. Let's see if Bitcoin can open next week above 71K. Enjoy your weekend.